So just to recap, in case you guys didn't see it, basically our dropped almost 5% in one day.
You can never anticipate where the bottom of the market is. We just know it's cheap today. Whether it'll get cheaper tomorrow, we don't know. The exact definition of arbitrage is riskless profit.
Mahathir is saying, sorry guys, we don't have the money to exchange back for you.
You can't take it.
Just suck it up.
The best thing you do is just don't look at the markets. Just switch it off. Stop reading the news, right? Completely shut down. Come back 6 months. Okay, welcome to a special edition of Borak Bursa, where we're going to be talking about what happened most recently in the past week, which is the market meltdown, not just locally, but all across the region. Here on my left, I have Chuck here, who is to represent the average investor. And as well, he's also an investor in our snowball strategy, private mandate. And we're going to talk about, how we felt and talk about the most recent events. And of course, we're going to answer some of those questions that you guys have posted here as well.
Yeah, so it's going to be slightly depressing when I'm wearing black, basically. So I'm actually an investor as well. EquitiesTracker was actually my first investment.
Oh, thank you.
Yeah, in the equities market. And it's been doing really well all this time.
Until
last Friday. So just to recap, in case you guys didn't see it, basically our KLCI dropped almost 5% in one day. As I understand it, this is one of the worst drops in a single day for our market. Since when?
1987, I believe.
Huh?
Yeah.
Worst since 1987.
Yeah. I think it even beat COVID.
Wow.
Yeah.
So, the first thing I did was, of course, I go to my own portfolio, right? And I saw okay, it's still positive, it's still positive since the start of the year, which was a good thing. But it dropped quite significantly. And obviously, a lot of our customers as well had the same kind of emotions. Maybe you can just talk us through, on that day itself, when you saw this news occurring, how did you feel? What was your immediate response to it?
First of all, I would say I was a bit in a bit disbelief. I'm like, okay, because we're very close to our 1 year anniversary, which is exactly next Wednesday, and the portfolios have been doing fairly well. I think from a year ago they're up about close to 30% before this dip, right? So I was a bit upset. I was like, okay. And I think after that kind of, settled in, then I was actually quite excited because, we had to understand why it happened.
Yeah.
And I think last week we talked about, we kind of put out a video and we explained about the yen carry trade and once you kind of understand why, then we can start drawing reflections on financial history, right? What happened. So we always ask ourselves, is it permanent?
Yeah.
Or is it temporary?
Okay, we'll get into that later. But
yeah.
The immediate aftermath, I'm sure you guys got some messages, right, from your customers and stuff like that.
Yeah, I think most people were shocked. I mean, some who didn't read the news probably were a bit later, but probably sometime this week when they're like, hey, what happened? What happened, right? So then, yeah, luckily we did that video, so I just forwarded those videos.
But maybe you can give us the spectrum of emotions that you got from people.
I think most of our investors were fairly calm because they've gone through our education series. So, the stocks that they have in their portfolio and they know it because it's quite transparent. They can see exactly what they own.
Yeah.
Fundamentally pretty sound.
Yeah.
So we always say that in the short term, the stock market behaves like a voting machine, right? So it's very sentiment driven. Yeah. But in the long term, it's a weighing machine, right? Yeah. So it's a very famous Buffett saying. So if I think most of them are quite well trained to kind of, okay, let's not panic, and let's see how it goes.
Yeah. So that's a good thing, lah. I mean, the fact that our stocks are based on value investing, which means that whether it goes up or go down, you recognize that you're going to hold it in the long term, so it doesn't really matter. I remember, okay, so just to quote my parents, my mom has this famous saying, when I asked her how well she did in the stock market, and keep in mind that she has not gone through EquitiesTracker GPS or whatever, right? And she'll say like, hey, I have not lost any money in stocks ever. And my dad will add that, yes, because you've not sold anything ever. So they have not recognized any value. So
Right.
she's holding on to some stocks that are probably not worth much by the end of the day, right?
Yeah.
So the fact that we do value investing also means that when we hold on to stuff, we fundamentally believe that they're worth something and that eventually the market will correct itself to whatever it's worth.
Yeah. That's essentially it, because I mean, from a space from 1 week, if we look at the portfolio of companies that we have, honestly, it's business as usual, right? None of them had exposure to yen, or were exporting to Japan as a major customer, or importing. I would say a lot of them were somewhat, I would say, export-oriented. Those export-oriented guys who export in USD, you're going to see probably a little bit less profits, but it's not that significant to the point where it wipes out all profits here.
So you talked about the carry trade, and that's something that you mentioned last week. So let's move to why this all happened, okay? And whether you guys actually saw it coming or not. So we know that, of course, the global market has plunged as usual following the US market. And that you guys actually talked about it in that video last week. Was it what day?
Saturday night.
So, okay, a few questions here. The first one being, if you saw that video on Saturday, did you anticipate that would be a bloodshed in the market that week in Malaysia?
Okay, so the bloodshed already started on Thursday, Friday.
Yeah.
Right? And okay, so the question is, did we anticipate the yen carry trade? I wish I could say yes, but the answer was no. Okay. Should we have anticipated it? Yes. Okay. Why I ask you why? I tell
It's a
you
very
why.
honest answer.
Yeah, I tell you why, right? Yeah. Because our late founder, my dad, wrote about this back in 2007, and it was the exact same scenario, right? And it wasn't until that Andrew, my brother, pointed out to me on Friday night, it kind of hit me like a ton of bricks. We should have anticipated this. But it's already happened on Friday. So using history as an example, we have to do what we believe it's correct, and was then deploying as much cash as we can into the markets on Monday. Yeah.
So basically, doing a sell-off before that on last week?
It was too late to sell anything.
Right.
So whatever remaining cash and rebalance the portfolios was, we just had to go all out on Monday to make that happen.
Did you anticipate that Monday would be the bottom of the market?
No, you can never anticipate where the bottom of the market is. We just know it's cheap today. Whether it'll get cheaper tomorrow, we don't know. We don't know, right? But we know today, that's all we know, right?
Yeah. This is a good tip in general life. If you see something that's worth it to you, just buy it. Don't worry whether it'll be cheaper tomorrow or not. Unless it's like 8-7 and tomorrow is going to be 8-8, right? Then of course you wait, right? But there are no certainties in life except for Lazada sales, honestly.
And we had an internal discussion as well. Some of us were adamant that Tuesday was going to be red. And I was saying, look, I'm not certain of tomorrow. I'm certain of today. Deploy as much as we can today, because tomorrow we don't know what it brings. And true enough, the market rebounded on Tuesday, right?
Right. So we caught it, though.
Yeah, we caught it.
Great.
But do I know Monday's the bottom? No way. You will never know where the bottom. Because we did start deploying on Friday as well. And then hit some of our ladders, and then Monday very aggressively. To the point where we get whatever we can get. Right.
Okay.
But, we get whatever we
Sorry,
could.
I think I just need to explain this a little bit to people who don't understand how these funds work.
Yeah.
So in general, let's say you put in 100,000. That 100,000 is never fully going to be in the market if it's a responsible fund, right? They will keep some so that they can buy something when it's of better value and hope to raise it. So let's say, for instance, my portfolio, you might have kept like 80,000 in stocks and 20,000 in cash, so that if the market plunges like it did, you can use that 20,000 and buy the remaining stock cheaper and wait for it to rebound up.
Yeah, essentially.
And that kind of almost, in some ways, mitigates any losses that might have happened, or some, at least you'll mitigate some losses that happen.
We couldn't mitigate the temporary losses, like when it dropped Friday and Monday, like we can't because we're already invested.
Yeah.
So the best thing, like the only two options that we can do, either sell off those that didn't drop as much,
Yeah.
convert it into cash and then buy it on the same day,
Yeah.
or whatever cash we already had to buy it.
Just to recap to everybody else, in the immediate aftermath of the S&P 500 crashing, right? How long did it take for our market to respond to that, like with our bloodshed?
Well, the US market starts Malaysian time, 9:30 p.m. and it ends at 4 a.m. So you've almost look at it 24-hour cycle. So when it started being red, the next morning at 9 o'clock when we open, it's red already.
Wow.
Yeah.
So it's barely any time to respond now.
No, I wake up in the morning, I was like, okay, red. So it looks like it's gonna be a red day. So that's how we do it. So like last night it was green, very green.
Yeah.
This morning immediately everything was up, right? I know market's probably just closed. I think everything is pretty green today.
Yeah. So do you think that by the time people see this in about a week's time, do you think that we'll actually be back to where we were? Or do you think it'll be slightly lower? Or what do you think?
I can tell where we are today. We're exactly 1 week from where we started. I think we're probably from the peak to the bottom. I think we are probably... So we're at...
Halfway up.
100 is the peak. 0 is at the bottom. We're probably at 50 now.
Okay.
Yeah.
Okay.
Yeah.
So hopefully by the time you guys are watching this, we'll have nothing to talk about already. It'll be all like, hey, hunky-dory, nothing happened,
Yeah.
But in that essence, actually, if let's say theoretically it does recover within 1 week, your funds would have done well because you would have bought more when it was at the bottom on Monday, right?
Yeah, so theoretically, if everything went back to the same price as it was,
Yeah.
we would definitely be higher than where we started with.
Okay, cool.
Yeah.
There are some questions that came in from our social media. So we asked you guys, we said that we were having a podcast about this topic, about the market crash, and we asked for your questions. So we have a few of these questions here. There's one from Faris Kamaruzaman. He basically said, is there any carry trade data available publicly? How do we know where and how do we know how much? So the carry trade was something that Alvin talked about last week on TikTok. Our TikTok channel is at Alvin Equities. So he talked about basically how, and correct me if I'm wrong, the Japanese market lowered its interest rate to almost 0.
Okay, so we kind of got to rewind this a bit of history. So if you guys remember, January 2022 was when the Fed started increasing interest rates. That literally went from 0 to 5.5% in about 13, 14 months.
Yeah.
So Jan 2021, right? So all the G7 countries, so Western economies, followed suit. So you have Australia, you have Euro, you have Bank of England. They all did the same. They went ballistic with the interest rates, right?
Yeah.
The only G7 that did not follow was Japan, right? They kept it at negative or 0 during that 2-year period, right? Up to now, now we're 2024, right? So we're about 2 years now. So when you have this kind of imbalance, what happens is that, just to explain the carry trade, is that you're gonna find arbitrage opportunities.
Okay, Chop.
Yeah.
Arbitrage. Okay, so we discussed this in the office that day when you mentioned it to us. I was like, what's arbitrage? So is it like when you want to make a fixed deposit, okay, and you see one bank offers 5% interest and another bank offers 10% interest. So the difference there is 5%, right? So you can borrow from the bank that has 5% and you can give it to the bank that has 10% and then you make the 5%.
Yeah, pretty much. I mean, that's a good analogy.
Okay.
The exact definition of arbitrage is riskless profit.
Yeah.
So
there's no such thing, right?
There's no such thing as riskless profit, but as close to or very low risk profit.
Okay.
So because it's return is risk adjusted always, right? So in that sense, so if you borrowed in Japanese yen and then you bought US dollars, and then you put it into US Treasury and you were getting 5.25, 5.5%, and you were paying 1% on your loan, it's free money, right?
Yeah. So imagine, in that same analogy, the Bank of Japan is offering 0% loans. So you borrow as much as you want from them and you give it to the US who has fixed deposit rates of 5.5%.
Yeah.
So you make 5.5%. That's an oversimplification, but essentially
pretty
that's
much, because, and it's low risk in a sense, right? I said low risk in a sense because if you're buying US government treasuries, the risk of default of the US government is
Very low.
very low lah.
Historically, it's not happened lah.
Yeah, so
Yeah.
because they can print themselves out of debt, right?
Yeah.
So that's why there's an arbitrage opportunity, and that arbitrage opportunity was over an extended period, almost 2 years.
Yeah.
Right. So imagine, right? I mean, you don't have to do much if you got good cash flow and you can borrow in Japan. I know there's a lot of talk about hedge funds and things like that, but I think companies, hedge funds, fund managers, really all have done that.
Yeah.
And the answer to the question, is there any carry trade data available? No, there isn't, right? What we can, so I read an article just yesterday from one of the big international banks to say that about 75% of the carry trades have been unwound, right?
Okay.
That means they've all moved back to Japanese yen.
Okay, so basically people have withdrawn their fixed deposits from the US and moved it back to Japan because they don't want to suffer the higher interest rate now that is coming out of Japan.
Yeah, so the trigger point, we had a perfect storm last week. We had a perfect storm. So now, of course, they didn't just buy US treasuries. They bought G6, G7 assets, right?
Right.
So which means equities was one of them, treasuries one of them. Any assets that's denominated in that specific currency. So it could be Aussie dollar. So you notice there was a trend there, right? The Great British Pound, Euro, USD, Aussie dollars, right? They all fell. They all fell at the same rate. Actually, US was probably one of the best performers within these G7.
Really?
Yeah, correct.
Oh.
So Aussie dollars fell even worse than the US dollar, right? Euro as well, and the pound in the last 1 week, right? So what we can gather, we've said, is there any publicly available data we don't have, or not that I know of. But we know it's like, if you had a cough or a runny nose, I can kind of guess that maybe you have a flu, right?
Yeah. Which I do.
So we can guess, because the US dollar against the Japanese yen in a week literally depreciated 15%. That's huge, right? So if you think 5% market drop is big, imagine 15%. So what happened was
huge capital outflow out of US into Japan.
So sell any of these basket of currencies, assets.
Yeah.
Quickly buy back the yen, because I have to pay my loan back in yen, right?
Yep.
So that's why the yen appreciated so much in such a short period of time.
Yeah. And these things, do they happen like immediately, like overnight? Like people can make these movements overnight?
Yeah, pretty much. I mean, they that's why the problem is, if the unwinding was slowly done, I don't think we're gonna get such a big dip.
Yeah.
But because we had the perfect storm, because if you look at the timeline, Japan said that hinted that they're gonna increase interest rates.
Yeah.
Okay, everyone's like, okay. Then
did they hint?
Who?
Japan.
Yeah, they did. They came out and said, it was an official statement.
So then people still not scared. People still don't want to
So they were like, markets take time to react a bit. Then the US jobs data came out, right? And it was way below expectations. And then
what's the effect of that? Sorry.
The effect of that is that, like just like a bird, just like a swallow doesn't make a summer, there was a bit of panic that, jobs data look bad, therefore recession.
Oh, okay.
All right. And it's never one data point that points you to a recession period, right? It's never. But this is why we talk about overreaction.
Yeah.
And this literally happened like days within each other, like the next day, right?
Yeah.
Then the Federal Reserve had a meeting to say that, nope, we're keeping interest rates the same. Okay, fine. And then a day after that, Bank of England said, nope, we're reducing interest rates, right? So it was perfect storm, right?
Right.
And everyone was like, you know what? Let's all get out before this thing explodes. So, imagine having a room full of 100 people at a party and everyone's rushing to the same door, but there's only one door.
Yeah. Okay, interesting. So then there's another really good question here, which is global markets are down, everyone's panicking about recessions and stuff like that. How to best capitalize on this fear?
If you're taking a long position, the only way to capitalize this fear is buy.
Buy now.
Buy on the dip.
Yeah.
Like Monday. I mean that if you say how to capitalize on this fear, it's if you are talking about investing, is buy when markets are down, right?
And it's continuing, right? I mean, just to like the average person is gonna feel like, okay, let's say you say buy the dip. Okay, fine, I'll buy the dip. Monday, I missed it already. Never mind lah, next time lah. You know, so then you would probably, how would you respond to that?
I'm not here to give financial advice. I just want to be very clear as well. So maybe what I would do if I miss the Monday, or if I miss the Monday, Tuesday, Wednesday, Thursday, Friday, because today is Friday.
Fair. Yeah. And then by next week, by the time they watch this, it'll be the following Monday or Tuesday.
Yeah, I think you must always look at price and value. I mean, always if there's a price and value divergence, that's what you should do. Capital, but it's easier said than done.
Yeah.
And I can tell you when I first started my career very early on. So this is probably my, I would say, fourth major economic cycle that I've gone through.
Yeah.
And I would say every economic cycle that I go through, when we go through the major dips, I can tell you I'm a lot more calmer.
Yeah.
To make the right decisions. The first two, I was still jittery. The third one, I was like, I think the next one is...
It's like that famous meme with James Franco one. It's like your first time, and they got the noose around his neck and all that one. Yeah. Okay, so let's move towards that. Okay. So you say you've been through a few economic cycles, and of course, Bursa is coming back. The KLCI is returning to 1,600 plus already. Like you said, it's 50% recovered from the bloodbath of last week. So you didn't, for all the investors out there, you didn't actually lose that much. You actually recouped a lot of your losses already, and you might even be doing better now if you actually had bought more on Monday, like we did. So how long is this process going to take? And I know that you feel like obviously Malaysian market is undervalued still. So how long do you think it's going to take for everyone to just calm their nerves and start buying back and realizing the inherent value in Malaysia?
So I think if we look at Malaysia, we have to understand, if you look at a 10-year KLCI, we're talking about KLCI, versus all equities index, which is all the equities in the world, the last 10-year period, the all equities index, I believe, went up, if I'm not mistaken, 70-80%.
Okay.
In the last 10 years. Okay. Quite decent return, right? Malaysia was up 1%. So you can see how far that gap is.
Yeah.
So, and of course, the reasons we all know now was, we had a revolving door of prime ministers.
4, 3, 5?
5.
5.
We had the 1MDB thing that happened. And, we saw foreign fund flow going out, right? So during this period was tough. So therefore, our Malaysian market didn't perform that well relative to the rest of the world. So now, if investors are seeing that things are a little bit more stable, policies are a bit more stable, things are moving forward, there is growth.
Yeah.
Then, we were just starting to recover for 6 months of this year, and then there was a dip.
Oh,
right?
man.
So I think we have two factors going for us. We're playing catch up.
Yeah.
So even if we go up to like 20% versus 70%, that's a huge gain on the Malaysian market. It's huge, right? In fact, in this last 6 months, even after the crash, in this region, we are the best performing market. Yeah.
And you think that's going to continue? Like we still have a lot more value to regain?
I think we are playing catch up. So yes.
Yeah.
So in that sense, because we are playing catch up, even with an absence of growth.
Yeah.
And this was something that I mentioned earlier this year as well. That's where we have an edge over all the other markets.
Okay, so let's talk about the other markets right now. Basically, there are still fears right now of a recession, right? I think that's what triggered this whole thing. You got two things. You got the job market data in the US, and then you have the carry trade moving capital outflow to Japan. Is that going to trigger a recession? And if so, what do investors do right now?
I think, so let's talk about definition of recession.
Okay.
When I did economics in university, the definition of a recession is 2 quarters of GDP decline.
Yeah.
Negative growth lah.
Yeah.
Okay. Somewhere along the way,
it became 4 quarters.
Well, US has decided to change their definition of recession. So if you Google when was the last recession the US had, you're gonna find was 87. Most recently was 2008. Then COVID, right?
Yeah.
That's what they recognized as a recession. Okay, but if you like the rest of the world and who study economics, right, too negative. Actually, the most recent recession US was in was actually in 22. It already happened.
Right. COVID.
No, post-COVID.
Post-COVID.
Yeah. So they had 2 quarters of negative growth.
But they define it as how many quarters now?
They don't define it as any quarters anymore. They say, we look at jobs data and we look at unemployment benefits. We look at some outputs. We look at it. Then we define whether it's a recession or not.
Okay, so basically means that they can define whatever they want now.
Pretty much.
But the rest of the world?
2 quarters of negative GDP.
Are we likely to see that anywhere right now?
I think if you look at, I look at financial history. I look at financial history, right? So normally after a recession periods are very short-lived, 8 months, 12 months, that kind of thing, right?
Yeah.
Over the last 100 years, right? Except for the Great Depression, because it was made worse, right? There's a very good case study. But modern times, 8 months, 12 months is a common thing for recession. And then what happens is that markets recover much more longer, at least 5 times, least 5 times longer, right? So if we take, depends what definition you take, right? US is already out of recession in the last year plus.
So we shouldn't be going back into one so soon?
It is unlikely, in my opinion.
Okay.
If I stick to my definition of 2 negative quarters of GDP growth, then the most recent one already happened.
Yeah, that makes sense.
And it just wasn't reported in the press.
Yep.
And if you Google it, it won't tell you that as well. You actually have to go and look for that data, and you're gonna find it.
So you mean to say that no one defined 2022 as a depression?
No.
As a recession?
2022, no. No press covered it. I remember watching a White House, some journalists were asking, aren't you guys redefining recession? They're like, no, we are doing this. You can go and Google it. I think it's somewhere on YouTube.
Interesting. Okay. But then that one, the 2 dipped, and then after that, did it rebound the same way it rebounds after a recession? Yeah, then after that,
it's been positive growth for every quarter since.
Right.
Yeah, so I think the chances of a recession is unlikely.
Yep.
And I have to caveat this because if you look at the world markets, there are millions of variables that can happen, right? It's very hard to predict these recessions as to exactly what is the point, right?
Yeah, go on.
So it's very hard to predict exactly why it happens or when it's going to happen. You have those few legends like Michael Burry who predicted 2008 subprime. Yeah, correct. And why they're legends is because they did it, right? Because 99% of fund managers or professionals miss that completely, right? So it's very hard to predict. But if we use history as an example, as a basis, right? I think the recession has already passed. We've been past that dip already, right? Okay, and the fact that we're actually already expecting lowering interest rates going forward, I think that's only more positive than negative, right? Because we're already in such a tight liquidity supply, went from 0 to 5.5% interest rates in the US.
Okay, so let's go into the questions. One of the things that the V Fresh Prince is asking, and I think this is quite interesting actually. He's been trying to understand why Malaysian stock market kena, but MYR is strong.
Oh, okay. So why did the Malaysian stock market have a sell down?
I think he's trying to understand why the stock market is down and currency goes down.
Right. Okay. So to answer the question of why the stock market is down, because global equity markets were down. We are sentiment takers, right? We don't lead the market. So if the whole world is down, we will also be down.
So what he's basically trying to say is why the Malaysian market went down, but then the MYR actually went up.
Okay, so to answer the question on why the Malaysian stock market went down is because, sentiment-wise in the short term, we can't control.
Yep.
And we are sentiment takers in the sense that if globally sentiment is bad, our stock prices will also come down. So it's essentially what happened. But why did the Malaysian ringgit strengthen, right, against the US dollar?
Yeah.
I can say the same thing is why did the US dollar depreciate against the the ringgit, right?
Yeah.
So what actually happened was, did we actually appreciate against the US dollar or the US dollar depreciated? Now, what we know now in the past week is actually because of the sell down in US dollars to buy Japanese yen and other currencies. So actually the US dollar weakened against the ringgit. right? And most of the G6 currencies did the same as well. So if you look at the Aussie dollar, the British pounds, and the euro as well, the ringgit strengthened against all of them because they all depreciated.
So it's a good time to visit white people countries, lah.
I guess.
Let's go visit Orang Putih. Woohoo! Okay, so let's talk about how all this is happening, and somehow in all this news, all the bad news that we receive from Bursa and KLCI and all that, there's actually some really, really good news. Okay, so you sent me this article earlier today.
Yeah.
So in a nutshell, basically it says the global stock meltdown has actually made China and Malaysia look good. So you talked about China just now, and then now let's talk about Malaysia.
We talked about earlier. If you look at global equity markets versus Malaysian markets last 10 years, we were really largely underperformers, right?
Yep.
For reasons that were not only fundamentals. Fundamentally, there was really no reason, but it was very sentiment driven, right? MDB, revolving door of prime ministers, and so on and so forth, right? EM, for just to explain to the audience, EM stands for emerging markets. Because we've been low for so long, and now there is some sense of stability and policies going forward, and of course, in the last 2 years, Malaysia has made a lot of announcements attracting investors both from Western countries and also China as well. We see things in Johor doing well, and the free trade zone that's coming up. So there's a lot of development and a lot of new exciting things that are looking quite positive for Malaysia overall. And so much so that because we've been a laggard, we are the best performing stock market in this region even after the pullback. Right? And because we are catching up, so last month JP Morgan has said, they've upgraded Malaysia from underweight to neutral, right? Now today, or less than a day ago, Goldman Sachs had come out and said that Malaysia is looking attractive in terms of valuations, right? So it's interesting because
because Malaysians are never underweight, lah. I mean,
yeah. I think Malaysians always undersell themselves. And if you really look at the fundamentals of Malaysia, it's really not that bad.
Yeah.
And because a lot of the narrative is driven by the news, we actually need to look at the fundamentals. Our fundamentals are strong.
Yeah. And it's always been so for quite a long time now.
It has always been so, right? So we've had some very pragmatic policies, or very pragmatic policies, right? To move things forward. So I think now we're just trying to catch up to maybe the price is here, the value is here, or the price is here, the value is here. So we just do that catch up.
Yeah.
We're going to see some repricing of Malaysian equities.
So in other words, TLDR, it's a good time to buy KLCI still. Can't give investment advice. I know. Yes.
Yeah.
Yeah. Okay. And now this last topic, actually. So we actually included this because this came out within the last few days as well.
Yeah.
And I remember you sent it to me, and you said you were a bit bewildered, you weren't sure exactly what he was trying to say. This is actually a tweet from our former PM, Dr. Mahathir Mohamad. He was as part of that revolving door in 2018. And here he is talking about Malaysian reserves. So basically he's saying that it's very simple, right? We have 520 billion ringgit in reserves. That's a lot of savings, okay? Why can't we use it to clear our 82 billion ringgit in debt? Because we're paying, interest on that debt. Yeah. So what is your response to this? Why are you feeling so bewildered by this?
So I think if you read this, it makes a lot of sense.
Yeah.
And if you are less familiar with how reserves work in central banking situations, then it will make perfect sense. Yeah.
I mean, for me, it's like, if I got spare cash in the bank, let me use it to pay off my credit card.
Yeah. Except the money is not yours.
Okay. That's the first difference.
I think that's the first difference. So if we kind of understand when foreign investors came in, in the 90s, right? Foreign investors came in to invest in Malaysia. When you're doing big chunks of foreign reserves, right? I mean, you're investing a lot in, say, the Malaysian economy.
Yeah.
You need ringgit, right? So, you would go, and then those reserves sit with the central bank, right? So I'll give my US dollars, you give me some ringgit.
Yeah.
And then the central bank would create that ringgit, and give it to you, right? So 100 million, you walk in with 100 million, I'll give you 100 million worth in ringgit. That's created, right? So when I exit, the same thing happens, right? I give you back the ringgit, and say you are the central bank.
Yeah.
And then I give you back your whatever equivalent in US dollar amount. That's what the reserves are for. So if we rewind back to 97, why we had to have capital controls was a very simple reason. When the foreigners were
97, who was the PM?
yeah, exactly.
okay, just point it out. Okay, go
exactly.
on. Sorry, go on.
So he's a smart guy. He knows exactly how it works.
Okay.
And it was Tun M who imposed capital controls.
Yeah.
Why did we have to impose capital controls? So why? It's because the foreigners. It is really bad for any country to have capital controls. That means there's no free flow of money, right?
Yeah.
That means the foreigners who invested here and held assets in ringgit literally could not exit.
Yeah.
Because our central bank did not have the equivalent foreign reserves to give it back to them.
Right.
That's simple. That's as simple.
So basically, what that means is, okay, so let me just try and unpack this. The first point is your reserves aren't actually your money. It's basically holding the equivalent ringgit to, let's say, USD that someone already agreed to trade with you.
Yeah, yes and no. So is it yours? Yes. Is it 100% yours? Not really.
Yeah.
So it's a yes and no, right?
Yeah.
Because if you have a big exodus to people swapping ringgit,
then you won't have enough.
You may not have enough.
So
right?
in that situation, what happens? Do you go bankrupt as a country?
Literally, capital controls means that you are bankrupt in your currency. Right. And that's exactly what happened in 97 because if you remember, I remember as a kid because, Tun M called George Soros a moron.
Yeah.
It was front page in the Star. You can go and Google it, right? Because what happened was George Soros took a position to short the ringgit.
Because he saw that we didn't have enough reserves.
He saw that we did not have USD reserves. We were down to 500 million US dollars.
Yeah.
And he was right, and he made billions from that deal. Right? So when you speculate in the foreign exchange market, as a country, you are also, up against these smart guys, right?
Yeah.
Right? So he won. Of course, George Soros won. The whole of Malaysia lost because we had capital controls, right?
Yeah.
So you can't use that same...
Wait, so he implemented the capital controls after or before?
Well, when we didn't have enough USD to exchange for everyone wanted to exit, then we had to impose capital controls.
And then George Soros shorted the ringgit after that?
No, he shorted the ringgit before that because we were naked.
Okay.
We didn't have enough US equivalent,
So
right?
basically, capital controls is Tun Mahathir saying, sorry guys, we don't have the money to exchange back for you.
You can't take your
Just
money
suck it up.
Just suck it up.
Right.
Yeah.
And how does that affect us as a country?
It affects us because we lose credibility with foreign investors, right?
Yeah.
So can you imagine, I say I come to your country, invest.
Yeah.
Or you could, let's say you walk into I don't know, any Playland or whatever, you exchange it for tokens, then you cannot take the tokens out and get out again. It's bad for business, right?
Yeah.
So it shakes investors' confidence.
I'm not coming back here again, lah.
Yeah, I'm not coming back here again, right?
Yeah.
And I think that hurt us really bad. And capital controls weren't lifted until about 20 years later. Right? It took us a while. So, and you remember for the longest time we were pegged USD 380 to $1.
Yeah.
$1. Yeah. Why did I do that? Exactly this reason.
Right.
So please, this is definitely not the way to go.
Okay.
Yeah.
Okay. Let's just wrap this all up. Obviously it's still tumultuous times. I think there's going to be a lot more rough weather before things stabilize in the current market, whether you're invested in the US or in Malaysia. What would be your advice to investors out there on how to manage their own emotions?
I think managing emotions takes experience.
Yeah.
Yeah, and unless you've been diligently doing this for the most of your adult life, it's very hard. Like if you are starting now, you gotta think of it. You're back at kindergarten in terms of handling your emotions. Right.
Or it's like your first time calling a girl when you're 14 years old.
Yeah, you gotta get that experience now, right?
She didn't reply my SMS within 3 minutes. She hates me. She hates me. She hates me. Sell.
Exactly, right. So if you can't and you're a newbie and you're just starting to, and I can tell you honestly, it'll take time. The best thing you do is just don't look at the markets. Just switch it off. Stop reading the news, right? Complete shutdown. Come back 6 months later, right? Of course, in this day and age, it's quite hard to do that. But you have to be conscious not to do it, because sometimes even if I don't want to watch the market, someone will forward me something, right? Like and that will happen. I think this period really, if you look at shocks that we've had before, it's probably going to recover quite quickly. That's my opinion.
Okay.
I think by end of this year, we probably won't remember this.
Okay.
Yeah.
That sounds good.
Yeah.
All right. With that, I guess we end today's episode of Borak Bursa. Thank you so much for joining us.
Yeah. Thanks for joining us. I hope you guys don't panic and
Stay chill.
stay chill. Yeah.
Bye.
Bye.